Now, 60% of the people think that Bitcoin will not reach 300,000, so that's this line, at the end of 2026, end of next year. So 1.5 years from now, this is the 300,000 points. 60% of the people think we're not going to go there. In my opinion, we will. In fact, I think we go a little higher to the stock to flow target of 500,000 on average. 2013, we went 100x in the red dots. 2017, 10x. Last time, 2020, 2021, about 6 times. And now we're, 3 times up. And we're not there yet. The big question, of course, is why isn't the price higher than it is right now with all the inflow in the ETFs and the Bitcoin treasury companies buying?
Despite months of sideways price movement, institutional adoption of Bitcoin is at an all-time high. As of August 2025, U.S. spot Bitcoin ETFs have amassed over 1.2 million Bitcoin, valued at more than $66 billion. Additionally, MicroStrategy, the largest publicly traded Bitcoin treasury, holds an impressive 628,000 Bitcoin, nearly 3% of the total supply. Meanwhile, Ethereum-focused firms like Bitmine have built treasuries worth $3 billion, making them the third-largest crypto treasury globally. This massive influx of institutional capital through ETFs, public companies, and treasury strategies should have driven prices sharply higher. Conventional wisdom suggests that such demand for a limited supply asset like Bitcoin would push prices up significantly. Yet, Bitcoin's price hasn't moved much. So, what's behind this puzzling disconnect? In today's video, we'll hear from 3 leading experts: Plan B, creator of the stock-to-flow model; Tom Lee, co-founder of Fundstrat Global Advisors; and Jordi Visser, a macro strategist and crypto realist. Together, they'll help us dig into what's really happening beneath the market surface and explore what lies ahead for Bitcoin, Ethereum, and the broader digital asset space.
Let's look at the cycles. It's an on-chain model. It shows you which cycle the market currently is, and it's still red. It's still in a bull market. All the on-chain indicators point to a bull market, and it's a strange bull market. It's a very long bull market and a very flat bull market. So normally a bull market is a year, maybe a little bit less or more, but about a year, and now we're 1.5 years in already. So it's longer, but that's all okay. And it's also flatter, right? 2013, we went 100x in the red dots. 2017, 10x. Last time, 2020, 2021, about 6 times. And now we're, 3 times up. And we're not there yet.
Still paying taxes on your crypto gains? What if you didn't have to? With ITrust Capital, you can buy and sell crypto inside a tax-advantaged IRA, giving you a smarter way to grow your portfolio without worrying about capital gains tax. That's why they're the #1 crypto IRA platform in America, with billions in tax-advantaged transactions. There are multiple ways to fund your account. You can make a contribution, transfer an existing IRA, or roll over an old 401k or employer plan. You'll get access to a wide range of digital assets, low fees, and 24/7 trading, all backed by secure, one-to-one asset ownership with institutional-grade custody. And if you have questions, ITrust Capital offers 100% US-based customer support with real people ready to help. Click the link, use code DOSE7, and get your $100 funding bonus today. Start building your crypto wealth, tax-advantaged, with ITrust Capital.
The big question, of course, is why isn't the price higher than it is right now with all the inflow in the ETFs and the Bitcoin treasury companies buying? I don't know for sure, but what I hear around me is people, investors, rotating out of Bitcoin self-custody into ETFs and MicroStrategy. Maybe not with all their Bitcoins, but then at least with a big part of their Bitcoins, also to diversify a little bit. Many ways you can hold Bitcoin. And of course, that's what I did as well. I moved my Bitcoins to ETFs and Bitcoin treasury companies instead of self-custody. Anyway, still red, still bull market, still going up.
Plan B says we're still in a bull market, but this cycle looks different with flat, extended price action. A big reason? Investors are shifting capital into ETFs and corporate treasuries like MicroStrategy and Bitmine, which don't always show on order book. Bitcoin expert Greg Arrow explains that institutional hedging, buying spot Bitcoin while shorting futures, masks real buying pressure. Plus, ETF buys often happen off-market via platforms like Coinbase Prime, hiding true demand. This black box of accumulation keeps prices stuck despite strong interest. Next, Tom Lee will discuss how macro factors could spark a big move later this year.
Well, last week was definitely consolidation because we had 5 days where the market opened higher and closed lower.
Really?
And they call that bearish engulfing. It makes sense because we're consolidating that 28% gain from the April lows. And on the job stuff, I think it's just the data's catching up to what we already know. The labor market's been soft, right? So it's, I think, a positive setup because now the Fed has more ammunition to make a dovish pivot in the fall. And it's not too late because we know the thing that they're going to stimulate is the housing market. And you had a couple guests earlier talking about that. And so that is what strengthens the economy in 2026. So I think it's quite a positive setup. We're just consolidating and then we make a bigger move higher. I think the Fed needs to demonstrate independence. But you're right. I think when they look at their dual mandate, they're probably drifting further from the employment metric now because the unemployment rate, if you use the existing participation rate before this report, it's almost 5% now. So the Fed now has to be considering the risk of jobs market actually going into a cycle of weakening.
You have not thought that there was going to be necessarily a big impact from the tariff regime.
That's right. And I think the biggest takeaway is, first of all, if you look at the latest inflation report, the goods component that are tariff-driven, it's been only mild. But also, if you use the same inflation measure Europe uses, which is inflation ex housing, we're actually under 2%. The Fed, if they were the ECB, would be cutting right now.
That's interesting. So by the end of the year, or what target are you using now, and what time frame?
I think we're going to rally pretty strongly in August. So I think we can get back to 65 or get to 65, 6,600 all-time highs in the next couple weeks.
And then 7,000 in the next 12 months, above that?
Yeah, probably well above that.
Well above that.
Yeah.
Bitmine, we mentioned that at the top, is going to be, in your view, the MicroStrategy or strategy of Ethereum or Ether.
Yes, that's right. Just a month ago, I was on the show to announce I was becoming chairman. And at the time, the stock was $4.50, and we announced a $250 million investment led by Founders Fund and Mosaics and others. But today, we announced that we reached almost $3 billion worth of ETH. And
the largest ETH holder, then.
Yeah, the largest ETH treasury in the world and the third largest crypto treasury in the world. And we also announced that Bill Miller III made a major investment last week into Bitmine, so that he joins Cathie Woods in investing in our company in the past couple weeks.
Tom Lee predicts a major market breakout soon, with the S&P 500 reaching new highs this August, driven by a softening labor market and a dovish Fed pivot. This could boost risk appetite and help Bitcoin and Ethereum break out of consolidation. Jordi Visser takes a broader view, seeing a structural shift fueled by AI adoption, stablecoin growth, and agentic systems, trends that will direct more capital into Bitcoin, Ethereum, and the wider crypto ecosystem.
This is really about acceptance and adoption, and there's still a lot of people that doubt it. I will tell you that I get more conversations with people in terms of reach out from traditional fiat investors. I think retail has been getting in gradually since the ETF launch. You've seen that with the inflows. But over the course of the last 6 weeks, there's been a dramatic shift, beginning with the Circle IPO. The Circle IPO, for me, was a major event. Tom Lee spoke in interviews and called it a ChatGPT moment, and I could not agree more in the fact that it just brought a lot more attention to the space. I do a weekly podcast really focused on the macro world combining with crypto, and I will tell you that I've had more reach out on Ethereum. And again, I've talked about this being the year of network effects for crypto. When I was on with you last time, we spent a lot of time talking about that. But I've been waiting for a period where AI would converge with crypto and with regulatory changes. And that's obviously what we've seen this year. And then last year was opening up more and more retail to it with the ETF products.
What do you think? Really buy a Bitcoin or buy shares of MicroStrategy or Strategy, or buy Ether, or buy Tom Lee's, the company where Tom Lee is a chairman of BitMine. So is it better to get the cryptocurrency itself or buy shares of digital asset treasury companies?
I think it depends on the risk tolerance that people have. If they want more risk, they can go buy the treasury companies. I would stick with MicroStrategy in terms of Bitcoin. And I think since Tom Lee kind of has the first mover advantage in size in there, it's probably his route. But for people sitting at home that are getting involved, this is not a speculation to me. When this is exactly on the point of the public markets changing in the 2030s, I view the investment in first Bitcoin as being the S&P 500 of the future. I've said it repeatedly. I'll continue to say it. In a world where AI disrupts all businesses, every single business will be disrupted by artificial intelligence as we go forward. I just don't feel people have spent enough time on it. What Bitcoin represents is something which is outside the current system. It will continue to gain strength. I think on the last program, I said it would go above 200,000 this year. I still not only believe that, I think there's higher highs for it going forward. I think this is something that people at least need to focus on as a small portion of their portfolio, if for no other reason that I think from a standpoint of what is a certainty going forward, the current existence of the framework we have in capitalism is changing going forward. And if people don't believe it, they need to have some sort of a hedge. And Bitcoin and Ethereum themselves are at least combined a good way to do that. If they want to get in the treasury companies, they just have more risk, but I think they'll also work for the near term.
What is the number one question you're getting from what you called traditional fiat investors about crypto and potential investment ideas?
The number one question is, am I too late? So, which is an indication of people's fears of buying the top. So people are never going to put much money into it. I was on an interview earlier in the year with someone who hates it. And at the end of the interview, I just said to them, you will own it before the end of the year. You just won't tell anyone. This is part of the thing we saw in the polls for Donald Trump, is that he won the election going away. And that's because a lot of people that came out of the polls wouldn't admit they were voting for him, but they did. Bitcoin still fits in this situation where I think after 18 years or 17 years of continuing to move higher, being a $2.4 trillion asset, one of the largest assets in the world, it's getting harder and harder for people to be negative against it. So now the acceptance is starting. I think the adoption phase will come once the agentic world takes off. And that's the thing, Sherry, that I just want to make sure, I'm sure we'll be doing these again in the future. Every time I come on, you just ask me, how are we doing on the agentic world? As AI agents are transacting more, stable coins will be used more. That means people are entering into this world of the digital assets. Bitcoin will always gather a portion of that money that ends up there. And I think that's where we're headed for over the rest of this year.
Connecting Plan B's on-chain models with Tom Lee's macro outlook reveals a quietly bullish Bitcoin setup. Plan B's stock-to-flow model, though controversial, is based on scarcity driving value. He sees Bitcoin still in a bull cycle, longer, flatter, but alive, with a target of $300,000 by the end of 2026, potentially reaching $500,000. Tom Lee, focusing on real economic data like jobs and inflation, expects a Fed pivot soon with rate cuts that could fuel a big bull run. He's already predicting new all-time highs for the S&P 500 this August, which could boost risk appetite across markets, especially crypto. Despite different approaches, both agree the major rally is still ahead. So, as the market drifts sideways, ask yourself, is this just consolidation or the calm before a big surge? For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.